The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, every market day, I should say. And I'm just doing a quick line here just to show the power of a trend line, how you can do that. I'll be giving a course. I'll be showing how simple tools, really simple. This one is going to be the basis of absolute simplicity of you don't need too much in the way of technical tools. Some programs don't have, say, circles or semicircles, but I'll show you different ways of doing these things. Just let me finish this and you'll see exactly what I'm doing there. If you're looking at Tiger TV, you'll see that the E-minis had a spectacular open, spectacular run. The E-minis, in fact, went to 1754.50. And you know what? This is still a potential leg A. I have to say I'm going to still keep it. I'm going to keep it as EA. Let it prove itself. No reason to make a change. Stochastics at 96%. Still going to wait for a bunch of things to happen. That doji candle yesterday has been absolutely critical. A close in the next 2 days below the candle's low of 1734.75 means one thing. A close above yesterday's candle high, doji candle, of 1742.50 means another. Now, why on earth did that little froggy go running around in the throat? That's very interesting. All right, well, our story is, here at TFNN, we start off at 9 o'clock. Live. Steve Rhodes kicks us off, and Monday through Thursday he takes the first 2 hours. I follow up with my Tiger Technicians Hour. My service is called the Opening Call. A very, very comprehensive look at the markets, what the parameters are, what we're going to be using, how the trend and the volatility index are all very important tools in my toolbox. Different levels, different parameters, but the most important thing is the notation, the A to B to C to D of higher peaks, etc. On the way down, we call them troughs. In the 120-minute chart, we've got a very long-legged bar so far, only 2 hours, not even 2 hours into the day. Having made a leg E, I'm calling this an E for the moment. Let it prove itself not to be an E. And that says that at 1745, 1746 right now, up 7.50, still very good action. How that 9-period moving average has become and is becoming at 1741, key support is very important. So to sum up real quickly, in the E-minis, which trades almost 24 hours a day, still a powerful single leg up from the long-legged doji of 1640 round number low back on October the 8th, I believe it was the 8th, 9th. Gone straight up, called a floating letter. Now, let me put that aside just for a moment, a little education in the Chapman wave. That was called an A. I called it a gray A because it was underneath the previous high, important high, of peak D on the 19th of September, 1726.75. That is A. Still called a floating letter because it hasn't made a peak. That is A. That is A. That is A. That is leg A. Breaks out to a new high. I can now change the color to the usual dark blue that I use. And that is A. And that's where, right at that particular moment, I put E/A. Why? Because the peak D top that was made on the 19th, the pullback after that did not break below 1618, which was the low bar back in late August. So that says there's a chance that this is a continuation pattern of the old waveform, having taken a big breather, but it's still a single right arm extension. And the proof of the pudding has to be if the stochastic holds above 80%, especially if it holds above 90% on any sharp pullback. We haven't had a pullback. This is still, even from the doji of yesterday, this is still leg E/A to the upside. The stochastic's at 96%. That is very strong. But you can see how quickly these things can turn down. The MACD is very strong. So as it stands right now, and there's a lot of background noise, let's call it, at this particular moment, to say, don't get too carried away. This, in fact, could be a brand new leg A up if the technicals maintain their strength, the veracity, the momentum, especially that fast-moving average of the MACD. So the day is young. Let's see what happens. In the portfolio we have for subscribers, a majority of stocks are long, doing very nicely, thank goodness. And we do have a short which is fluctuating between the good and the bad. Just got it yesterday and today. Well, it's two shorts. It's on the same thing, but different positions. And we'll see what happens. That's the way you got to do it. You're looking at weakness, you got to trade the weakness. You're looking at strength, you got to trade that strength. So, as it stands right now, a decisive break above 17, the high is 1754.50 on the E-minis. Decisive break into the 1759, 1760 area says decisively this market is going a lot higher. So let's go through a couple of things. The Dow right now is trading up 62. It was actually up 115 or something like that, the Dow. Then it pulled back to about plus 40 or something like that just a short while ago. Now it's bouncing back. So 15,454, up 62. S&P is up 715 at 1751. The comp index is up 2.5 at 39.22. Now, this is really interesting. Gold is up $26 at $13.41. Don't forget, I think today might be the very last day of, is it today or was it yesterday? Tuesday. Anyway, check out that front page. Check out Tom O'Brien's Gold Report. Fabulous entry into the golds just recently, just timely for those people who got the 600. Can you believe it? 600 editions of the Gold Report. And so gold is up at the 1342 level. Silver's up 48 cents at 22.76. Platinum's up 14, and high-grade copper is back in the 3.33 area. Nice action. It needs to get to the 340s or higher, and then that's going to be a bit of a breakout. Crude oil's down at 98.49, and bonds are up $1.630. The TLT is up $1.15 at 107.85. That is very interesting. Now, let's do a couple of other things. I'm going to show, so 877-927-6648 is the number to call. Let me get rid of this 120-minute chart. I'm going to show you a couple of things that I find really not just important at this particular moment, but how can I put it? They are demonstrating certain aspects of the market that this guy there. I just wonder. I like to find the right words. Otherwise, it just feels like it's getting fuzzy. This is where I look at fear and greed. I do not use that term for the VIX, which is the traditional term of fear and greed. I look at it as buying pressure and selling pressure. And this morning, what happened was, with all this powerful and really a ferocious move to the upside, what happened was the volatility index was holding very well. And now it's up plus 62 at 1378. And that says, be a little bit careful here. This is where I'm beginning to feel exuberance. I'm beginning to look at certain sectors and certain stocks and say, oh, man, why didn't I this and why didn't I that? When you start to second guess yourself, that's when you're liable to jump in with both hands and both feet and forget that there is a flame burning out there. This is where you need the most caution. If you're in positions that are working, fabulous. If not, don't go diving into sectors that you say, oh, they suddenly come alive. Why? I'm going to explain in a minute why. Look at the action. Remember yesterday I spent some time, a couple of hours, I did both my show and Larry's show, straight after mine. I spent quite a while on Netflix. I had a couple of subscribers and Chapman waivers who had bought Netflix. We didn't have it in our portfolio, but they had it. And what I was saying is, although I've got an alternate wave count, which says that it could be a G, but it could be a B at the same time in the daily chart, I was a little concerned only because the weekly chart wasn't going to go to a leg F. It had in fact started leg F, but it would have accelerated to the upside. And what I mentioned to those folks that emailed me was I would take something off right there. And Netflix, I think, was up at about up 15 points or 13 points. I said, what is wrong with taking some of your money off now, rewarding yourself? If there is a pop-up in the morning because it's the earnings are just blowout earnings, then you can do other things. And that's a bonus. You never expected it, and it's just like money from nothing. You get an extra bonus. If, in fact, it drops sharply immediately after the earnings report, you've already rewarded yourself, and now you can handle the rest of the trade. You could think of maybe adding to it if you want. You could do anything you wanted. But the money has been taken to reward yourself. The money's been taken almost at what might be, at that point, if it turned down, at a top, a short-term top, that was the best thing to do. So I'm real thrilled to have gotten a number of emails from people saying, thank you so much. We've started using your methodology. We're now not afraid to enter the position. We're not afraid to actually take something off, fearing that we're going to lose, because we have a plan. And there's exiting a very successful position by rewarding yourself and keeping some of it on has worked very well. I had a call, an email. Thank you, Chris. Hi, Basil. Thought I'd send first thing this morning this text. It really felt controlled to take the partial profits. This morning's pop is gravy. The real trade was already bagged. Again, thank you for this lesson in self-control. You're a grateful student. So I love hearing that. And there's a good reason for it. Look what happened to Netflix this morning. I was actually looking for a round number at some point. It missed it. It went, instead of 389, it went to 389.16. That's a pity. I would have loved to have seen that round number. So it opens at 387.84. It soars all the way up to 389.18, just no more than 1.5 points higher. And it's trading now 340. 340 is a decline from the 389.40. That is a huge decline, 40-something points. 12%. No, what am I talking about? Yeah, that's not good. I'll be right back. Basil Chapman, Tiger Conditions Hour. We'll take your calls. Dow's up 56.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I had a question during the break about Baidu. Is Baidu in a monthly G? Baidu is Baidu.com. It is a Chinese internet company. Made a high back in 2011. We used to have a lady here at TFNN in the den who used to trade Baidu. We called her the Baidu Queen. She was just fantastic. She could do 165.96. Let me just write this in. She just traded it beautifully. Folks, I can't remember what I said. 156.90. What did I say? 165.96. Okay, 165. 165.96, and I certainly hope her mother is doing fine. Her mother wasn't well, and she also wasn't too well, so we miss her. I'm just doing a quick bit of work here. It's almost like a cup, not quite a cup formation, but close to a cup formation. Let me explain this. There is a pattern that I look at, which is called the cup, the double top. I call it the drop bucket formation. It looks like an inverted lowercase h. It's a cup formation going all the way back to the top after a long move to E or F, and then it takes a breather. This is not quite cup formation, but it went all the way back. So 165.96 was the high back in 2011, July, and now this month it's gone to 167.55. It's just amazing how they've come back, 167.55. So the question now is that a G? Well, yes, Dahil was a name and is a name, and we miss her a lot. So looking at the way that the stochastic and the MACD have acted in the monthly chart, this long-legged doji, the month is not finished. I'm really watching it very closely, and I'll explain why. The technicals have improved, but they are not great in the monthly chart. And certainly for where Baidu is now, look where the technicals were back when it made its high in 2011. They are way weaker. However, at that point they were weakening, and that right arm extension to leg F at 265.96 saw the relative strength index failing. It saw the MACD not confirming on that second move up. Here you've got a rebound that says on balance volume isn't even acting well, but it is running. However, it's leg D in the weekly chart, Baidu, trading at 156.01, down 521. Now this is going to be really important. If Baidu takes out 150.40, the 9-period moving average, and let me just double check. Yeah, I haven't yet got a signal to say it's going to do that, but the little M-shaped pattern in the on-balance volume and the relative strength with a failure, a lower right shoulder failure, says this. Baidu had better be careful, because if Baidu closes under 150, I'm going to call it 149, 149.74, it was the low of the week of the 18th of October. I'm going to say 149 to clear all of those support levels from this month and last month. If it does that, then the candle that we're looking at of the 11th of October with a low of 141 and a high of 160.60, of 141.52, that becomes almost like a magnet. But it won't be a magnet unless at the end of November, we have to go month by month. If by October you're starting to test the 150.43 level, still got at least a good couple of days. What is this? Today's the 22nd. Oh, we've got a week and a day, so we've got 6 sessions. If by the end of October it breaks 149, that's going to say November is going to be absolutely critical, because you haven't got a peak yet. This is still a leg D. If in November there is no new recovery high above, let's call it 167.55 for now, and instead the MACD's fast-moving average is crossing under, by the end of November, underneath that fast-moving average, then you've got a really good chance that Baidu can go all the way to the 127s, which is the 9-period exponential moving average. That's the negative side. I'll just quickly finish that up with saying that on the negative side, saying that the daily has made a potential peak E rather than the B. If it's an E, it'll close either where it is now, 156.51 or lower. And by the end of the week, it'll have taken out the low of the 16th of 149.74. See how things are coinciding? And then you've got a Roman candle right there, Chapman wave Roman candle on the 9th of October. That becomes your downside target. Everything falls away from the negative side if Baidu makes a new recovery high, all-time high that'll be. An all-time high in the next 2 weeks or so. That'll be very positive. I'll be back. Take calls at 877-927-6648. Dow's up 53, S&P's up 5. I'll be right back.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
I'm Basil Chapman. We are back, and the Dow's up 43, S&P is up only 4. It was up. The S&P cash was up, and I don't want to change charts here. Let me go. The cash hit 1759.33. is trading 11 points lower than the high of the day. Now, I'm going to be watching this, and I'm going to talk about this in terms just purely of the Chapman wave. In the QQQ Trust series, the daily chart has had a spectacular move from 76.35. There was a Roman candle on that Wednesday. It just blew that apart the next day. It shot higher. That's part of the technique of this pattern that I call the Chapman wave, Roman candle. That candle right there. And when it does that, that's like a powerful, it's like a spring-loaded bullet. It just goes pop to the upside. When it's gone from 76.35 to today's high of 82.90, I would have to say that 6-point rally in one leg is really powerful. At the same time, how the stochastic X, which is at 97% and really good, in the next 2 days, let's look at, I was talking about the worst case for Baidu, and then I said the best case, take out the old high, and it's going high. It's just real simple. You've got your parameters set. Now it's the same thing here. The candle I was talking about, it seemed impossible just an hour ago or 30 minutes ago to say that a close above the doji candle, is what I said to subscribers for the analysis today, of the dojis that performed yesterday, a close above it, especially if there's a close above it for 2 days, is a very powerful thing, because it means you've now raised the base. On any pullback, you should raise the base, and you could go even higher. If there's only one close above, but in fact, if not only do you close below the high that of the doji that you had made the previous session, or bar, let's put it that way, but you close below, that says, besides, it'll obviously look like an engulfing. I mean, you've got wider parameters. That's an obvious thing. But besides that, if in fact it starts to take down the technicals, that's really important. In other words, if the stochastic by the end of the day drops to 93 and tomorrow there's a gap down and it's just a terrible day, all of a sudden I'm saying to myself, wait a minute, if we fill the gap with the QQQ trust series, which is trading down 9 cents at 82.25, if it closes under 81.35, that means it could test 80.87, the 9-period exponential moving average. If it breaks under that, this stochastic will be not at 97%, it'll be at 79% or lower. That could be a right arm extension reversal. I have to say that, and there's only one reason why. Because if you look at the different techniques that I've used in the weekly chart of the NASDAQ, this is leg E. The week has barely begun. I can't talk about the candle. I can just say right now it's got a doji candle, but it's useless. We can't talk about the candle. I can talk about parameters. And the parameters are that the MACD is still very strong. Stochastics at 95%. At this particular point, I can say that the trend line, this major, I've spoken about it before, this major trend line resistance level, which is just a tad, let me just check, maybe it hit it today, at 82.86, give or take, it goes way back. So if it has just a fractional, I should speak to Dave White, what is that called? If at the hinge, where the 2 points start to expand, if the degree is fractionally different, it makes a huge difference as it expands out. I can't remember. It's just been a long time since I did. This is geometry. A long time since I did that. But the angle of expansion creates a greater degree of leeway towards going to the top than it did earlier on, because the width has become greater. And that's the whole thing. So I can't say it could be fractionally out. But this trend line is really important. And if the Qs at the end of the week on Friday close at about 83, they're at 82.31, they made a high of 82.90. If they can go to 83.59, that's a breakout of... That's a really important breakout, because it's the first time it's up in this territory, besides the fact that it's in a decade or more high. It's very important because it's breaking another. That red line is even more important in terms of the intermediate term. So it's breaking 2 trend lines, and they're coming to an apex right there. And the apex that was forming is still rising right here. So what it's saying is that the strength of the QQQ Trust, the Power Shares QQQ Trust series, is such that we are right at this particular moment. I would even call it an inflection point. It can inflect higher, or it could deflect lower by Friday. I'll be watching this real closely. It's in leg up in the weekly. It's in leg E up in the Chapman wave in the monthly chart. Really important, very important. And remember the triangle that was the rising wedge that it was making, that it broke out of way back. It started breaking out of that trend line resistance back in July, was it? I think it was. Let me just double check. That was in May. It went to 74.95. So it's in territory that says now I can start to include a channel that was very quietly sitting there and saying there's a chance that the Qs could go to 87, the 87.70s or higher over the coming months if certain things happen. There is a chance that if by the end of October, beginning of November, there's a turnaround, or middle of November if there's a turnaround, that you're going to be looking at the lower parameters as support. At this particular moment, all we can do is say leg F/A in the daily. How it closes is going to be very important. Thus far, everything about it is extremely powerful. That's that. Now let's look at the IWM. IWM, now it's on its way to creating a little bit of a doji maybe today if it closes down just a little bit more from where it is now. It's at 110.69, the iShares Russell 2000 ETF. It is an F/B. 96%, but flattening out and not reversing down so far is good in the IWM daily chart. MACD is still expanding. The other technical indicators are saying it's a little bit toppy on the near term. When I say near term, whenever I say near term, I'm talking days to a week. If I talk intermediate term, I'm talking weeks. And if I'm talking intermediate, shorter term, near term is just days, 3 days, maybe 1 to 3 days. Short term can go into the following week. So we're talking about 6 to 7 trading sessions. Intermediate term, I'm talking 6 weeks, 4 weeks, 6 weeks or longer. And long term, I'm talking about a monthly chart going over maybe 2-3 years. So in this particular instance, I'm watching the leg D up in the IWM weekly chart. Doji on balance volume says getting very toppy. Stochastics at 95%, but it's made a series of arch formations. Now it seems to be flattening out. That's good, but it is the MACD. That fast-moving average. That's going to be really important to how it holds up here. The 107.17 level is the weekly 9-period exponential moving average support. But it is going, in fact, I'm looking at this on the daily basis, and everything about it says that within 3 days, there's a really good chance that the IWM will not only fill the 109.83 low of the 18th, but it'll test between 109.83 and 109.02, the 9-period exponential moving average. If, and I do stress if, the IWM doesn't close at its high today, but instead closes close or near its low, or at its low. So that to me is the way I'm going to be analyzing it right now. And there was one other thing. New York Stock Exchange, I was asked about NYA. I was asked if I could talk about the short-term trading index, Richard Arm's short-term trading index, the TRIN. I will talk to subscribers about it because for me it's very important that this is something I've spent a lot of time on, something I want to just keep proprietary between my subscribers and myself. So, there's another question about, hi Basil, I'm listening live and haven't heard you mention the TRIN yet. It was over 2 at the open today, and I'm wondering if that helps make the case for being leg A, probably have a nice spike in the next few days, maybe continuing leg A or beginning B. Any thoughts, Ian? All right, well, if I get a public question like that, I'll have to answer it, and the way I can answer it is this. I have the 184 is the high that I have on the TRIN index, and for me it is not giving any sign. There's no signal yet in the Chapman wave. I use the Richard Arms index for my own purpose in my own way, and it hasn't given me a signal yet. It's telling me something, but it's not an official signal, and I'm not going to use it as a signal unless it does that. So yeah. Now, I find this to be probably one of the most important charts. The NYA, this is the New York Stock Exchange, 10,387.17 was the previous high. Today's high is 10,083, 300 points away in a beautiful leg D, going right to, you can see the dashed line, resistance comes in this month at 10,204. Next month is a little higher. And that's actually the first trend line that I have. I'm going to do a little bit more work on that. But there's something more important. There's a left side, right side price time match. And this is the thing that I'm going with for now. And that says, in the second quarter of next year, we could be making a major, major top. I will spend time on this. No need to even think about it right now. I'm going to spend a lot of time on it. I'm starting to prepare a paper for my subscribers that's going to go into this in great detail. The methodology involved, the cyclicality of certain number of years, a whole bunch of things that I've used going back to the 1980s, which coincided with the 2000 top and then the 2007 top. So I'll be talking about that. And right now, the New York Stock Exchange, I think this is important because I've got this in leg C. No other way that I can count it but to say it's in leg C. And that's given me a real good clue to say there's a chance that this rally could go a little bit longer, maybe into first week of November, maybe the second, I'm not sure. I don't know yet, but so far that's what I'm looking at. And that's the reason why I'm inclined to think that although I've got leg D up in the daily chart of the NYA, that the stochastic and MACD are going to hold well, and the stochastic will hold in the mid-90s, even if there's a pullback over the next coming few days. Now, in a bull move, remember I talk about this, some of you, maybe you're new to my work. In a bull move, that is when I've gone from a buy signal to a buy mode in my Chapman wave methodology, there are no more than 1 to 2 to 3 days of consolidation and then a new leg up starts. That's usually the case. Now, if that's the case, we've got a leg C, a very quick A to B to C. If this is going to be peak C with the Dow not breaking above 15,518.10 tomorrow, so it makes a peak C or whatever the high is today, that's going to be something very important, because sometimes when you get to peak C, if you've had a very quick A to B to C, C takes its time to have, in this case, maybe a 3-day consolidation. I don't know. But in the meantime, nice action today. Not making a confirmed peak B of time and price, but instead the little mini 50,412.97 high of the 18th and 15,410.18, a 2.5 point pullback has made that little, you could miss it if you weren't looking, but that is peak B. This is leg C up right now. So that's going to be important to monitor. So now there's something else I want you to do. I want you to look at, I did that. IYC. I want to look at the IYC, which, you see how many charts are doing this exact same pattern, little doji pattern. Doji yesterday broke above it in some cases, a doji pattern possibly today. The IYC, which is the iShares Dow Jones U.S. Consumer Cyclical sector trust, is in leg D in the weekly and the monthly. It made a peak D, pull back. At this point, I can call it F/B. That's what I will do, just to be clear. And one of the things about the Chapman wave, you can have an alternate wave count. It's not like you're being fuzzy. You're actually being really clear, because you're saying we're in a very nice up move, broken to new highs with stair-step moves. I don't know yet whether this is an F, because the stochastic has 88%. It's holding okay, and the MACD is just turning up. I need to see what happens afterwards to see if it's an F or a B. And I'll be back and I'll explain it in greater detail.
Are you ready to ride the next bull market wave? Catch the Chapman wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report to celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd. TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. We're back, and I was looking at the IYC, and that IYC tells me very clearly, holding very well here, and this is the consumer cyclical sector. You know, I'm fascinated with the politicians going, if the politicians had done nothing and just continued, if Bernanke had said, I'm going to do what I did, and had a very quiet exit strategy, it's my opinion that the market itself could very well have taken over. And if you look at the retail sector, RTH and the IYC together, both have very similar charts at all-time highs. You cannot get the retail sector. If there was this big recession that everyone was talking about and the lack of jobs, you would not get it. My opinion is, yes, you've got a lack of new jobs, but the jobs that are there, people are very comfortable with, and now they are saying to themselves, I can spend money. I can finally buy that car that I've been looking at for so long. I can finally think about getting the house. That's really very different to talking about what's been going on. I don't know, that's just my opinion. I'm not an economist. It's just my impression from the markets acting the way they do, especially if you're looking at, come on, the retail sector, you could not get this kind of power. You could not get the sustained power. Look at the monthly chart. just have a look at this. It walked the 9-period exponential moving average since, try this, since September of 2010. The RTH, Market Vectors Retail ETF, trading at 57.54, up 31 right now, has closed under the 9-period exponential moving average twice. When was it? It was in the very sharp sell-off in 2011, going to the September low, the August low. Since then, it hasn't done that. It's getting a little tighter and it's starting to bump into this resistance. I think this trend line is going to be really important. But in the meantime, back at the ranch, talking about ranch, RTH, possible leg D in the weekly, G/B in the daily, stochastics at 95%, unless it takes out, it's at 57.54, unless it takes out 56 to 55 support in the next 2 weeks, it really takes it out decisively, plunges into the 55s. So far, it's looking quite good. So those are the parameters. So let's just do this about a closeout. What's today? We've got the options hour coming up. Always a fabulous show. Let's just do this. I'll use the Dow that I always use. Dow is the one that's lagging. It hasn't made an all-time high yet. Now, this is very important for the Dow. The Dow is 15,369 9-period moving average support in the daily. I'm going to say 15,220. Break that in the next 2-3 days. That's going to say, uh-oh, got to watch out for the upside. It might stall for a little while it takes a breather. On the upside, if by today's Tuesday, if by Thursday afternoon it's gotten into the 15,550 to 15,575 area, that's really good action, and it should climb to the 15,709 previous the all-time high that was made back on the 18th of September. Watch the volatility index right now. It's at 13.56, really struggling. Let me just show you this chart as we're about to go. This chart says it made a peak D at 21.34, left side, right side price time match, and it's plummeted down to the low of 12.34. It's made a trough B because the XIV, the inverted VIX index, has gone to a higher high, 29.87. I'm suspecting that it's going to go even higher. This is what I'm following, not the VIX, but the XIV. It's at 29.23. I think it's going to go into the 31 area, and then we've got to be careful. I'll be back tomorrow. Thanks for being here. Don't forget my opening call. Go to the front page of TFNN. You can get it for 2 weeks free. I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.